It's great to be here as part of the UK FinTech Week. I think we all should feel pretty spoiled by what Innovate Finance are putting on today. I think there's great signs of the success that UK companies are having here and taking around the world as well. It certainly makes me feel very, very proud. Now, I'm going to be running a panel later on kind of financial inclusion. Before we did that, I wanted to take 5 minutes to talk through the impact that FinTech, and in particular Funding Circle, is having on kind of the wider society. Today we're launching a report in partnership with Oxford Economics, which looks at this. And I think this is particularly exciting because what we're starting to see is FinTech platforms who are having a real meaningful impact at a large scale. That's something which Chris referred to earlier, and I think that's something which is coming to the fore more and more. For those that don't know, Funding Circle is one of the world's leading small business loans platforms. So we connect small businesses, established small businesses looking for capital directly to investors, whether they're retail investors, the UK government, insurers, and pension funds over the internet. So when I set up Funding Circle with Samir and Andy back in 2010, our mission was pretty simple. It was to build a better financial world. We felt like small businesses didn't get the best deal and they deserved better. 10 years on, I think we're doing a pretty good job. More than £7 billion has been lent to more than 68,000 small businesses in the 4 countries that we operate. So we're getting to that kind of meaningful scale again and again. Now, the report that gets released today has made the point that actually small business isn't really small at all. It's big business. More than 60% of employment in all the countries we operate is driven by small businesses. Almost as much in terms of GDP is contributed by those small businesses. And actually, over the last 4 years in the UK, more than 260,000 more small businesses have been set up. And that's actually in contrast to what's happening within banking and the amount of money which is going into to support small businesses. So it's pretty stark, actually. In 2018 alone, that Funding Circle lent more than £200 million on a net basis, more than the whole UK banking system put together. So when you think about it like that, we've got more small businesses being set up, but actually banks are putting aside less capital on a per business basis to support them. And the reason that FinTech is having such a good success is they're building better technologies to help these small businesses when the banks are failing to do that. Now, often I think you can get caught in a space where you're just talking about numbers and you're forgetting about the stories. So I wanted to just give you kind of one example. So there was a business called Arapina, runs by a founder called Michaela. Now, she is amazing, and I like this story because I think it sums up small business and the role FinTech can have. She was actually an architect. She decided that she wasn't going to eat any more dairy, wasn't going to eat any more gluten, so she started making cakes and selling them at Greenwich Market on a Saturday. What she found, actually, was the business did pretty well, and actually it was a bit more fun than being her architect. So she actually went and then set up a professional kitchen, which did really, really well. And then it got to the point when she was like, well, how do I take this passion further? And so she came to Funding Circle looking for a loan to say, well, how do I set up my first retail operation? That was a couple of years ago, and now she's setting up a second store. And the reason I love it is here is someone who was an architect who had no right to really become a baker and set up a business. But she had passion, and when you match that passion with capital in the right place, you know, the world is at your oyster. So I think, you know, that's the story that comes out. Now, what the Economic Impact Report says is actually it has a massive impact on society as well. So actually £6.5 billion has been added to the economies in the countries that we operate in. And it's not just value going into the economies, it's jobs as well. So when companies take out loans, they typically employ more people. And actually in 2018 alone, 115,000 jobs were created as a result of money going through our platform. Now, it's also good for all of us as taxpayers. That knocks on to higher tax receipts as well. So an extra £2 billion is contributed to the world's economies in tax as well. So I guess my point is FinTech is starting to have real success at mass scales on society. So I'm going to pause there on terms of the economic impact and now think about the next session, financial inclusion, and what role can FinTech have in making sure we have a society which includes more people across it. So with that, I'd like to welcome all the panelists, and please give them a warm round of applause. Great. Well, welcome everyone. So this is obviously a really important topic. But I thought I'd just kind of start off by just getting a definition locked down so everyone in the room is on the same page on it. So in a nutshell, financial inclusion means that individuals, regardless of their background or income, have access to useful and affordable financial products and services. So clearly that contrasts to financial exclusion, where people are cut out from financial services. Now, clearly there's a role for FinTech to play in that. There's opportunities, there's risks as well. And it normally comes out from a mismatch between customer needs and products, but also there's challenges with education. So there's a lot of different things which impact on this as well. Technology has a big role in that. Now, what I thought I'd do is just to kick off, is maybe we can just run through the panel. Everyone can give a brief introduction to who you are, the companies you work in, and maybe why financial inclusion is such an important topic for the UK. Anne, do you want to start?
Oh, I'll start. Anne Boden. I'm the founder and CEO of Starling Bank. After a long career in financial institutions all around the world, in 2014, I quit my job to start a new bank. I was talking to a journalist a couple of days ago, and they asked me the question, how do you measure success? How will you know in 5 years' time whether you've been successful? And my answer was that we as a movement of FinTech's new banks have caused the whole industry to get its act together and treat customers fairly. And every time I drive down the motorway and see a billboard where a big bank is copying what we are doing in the FinTech industry, that's a sign that the industry is responding and all customers are going to get a better deal.
I'm Asesh. I'm one of the co-founders and also the CEO of Salary Finance. So we've been running Salary Finance for the past 3 or 4 years now. The inspiration for Salary Finance was I have 2 children, we have a nanny, and it just really annoyed me that I worked in the city, I would go to a bank and get a loan for 4%, yet my children's nanny, as a more of a middle-income person new to the UK, would have no access to financial services or mainstream financial services, and so was left with very kind of short-term, very high-cost credit, which caused a kind of a big kind of endless cycle. So we now work with employers. We provide financial services through the workplace. In doing so, we can really restructure the economics of loans, savings, other products. And we do that across 150 big companies in the UK, also in the US, and reach about 1 million people today.
Hi there, Dan Smith, Managing Partner of Exponential Ventures. We focus on early stage FinTech investing around the theme of financial wellness. We really see financial inclusion as the on-ramp to the broader topic of financial wellness. And we, I guess, more holistically focus on physical, financial, and kind of mental health, as actually we see a lot of correlation between the three. And you see it a lot in the inclusion space. There's a lot of links to kind of poor mental health in certain demographics within financial inclusion, so we actually need to take a more holistic approach to how we think about the topic, and that's what we do.
Hi, I'm Stephen Simmons. I'm at Oakam, where I'm the Chief Risk Officer and Head of Data Science. Oakam is a lender that specialises in making credit more accessible and affordable for people who may be on low incomes or who are recent arrivals in the UK and have a thin credit file, or maybe work in the gig economy or 0 hours contracts and have very unstable incomes. These are all segments that are very hard for mainstream banks to provide credit for, especially when the average loan sizes of new customers is several £100s, where the costs of underwriting these loans in the mainstream financial system just is not economic. So for us, using FinTech is very much a way to provide a much lower cost form of underwriting loans to make these loans more accessible for our target customers. And in Oakam's history, we've helped 200,000 people to access credit, and many of those will stay with us for several years and then go on to mainstream banks once they've built up their credit record.
Okay, and I'm Gwyneth Nurse. I'm Director of Financial Services at the Treasury. The Treasury has overall governmental responsibility for the financial inclusion agenda, and I mean this is important to the government because the government wants everybody to be financially included, every individual, every business, and that's something which we are working to achieve so that nobody is financially excluded in the future.
Great, fantastic. So I thought we'd kick off with Stephen telling us about some of the examples within FinTech which have already helped with financial inclusion.
Right, so I'll start with an example from outside the UK. I'll pick an example from Australia. And one segment that we tend not to think of as excluded from mainstream lending are young people in their early 20s. So for many credit card companies, for instance, they would have very, very low approval rates for anyone under the age of around 26. They find that the default rates are high enough that it's not economic for them. So Pay Later is a company in Australia that does consumer finance at the point of sale, where you purchase, maybe a home appliance or something like that, pay a quarter of it at the point of sale, and then the remainder in 3 monthly instalments. They are able to approve a very high number of these younger customers, and their default rates are just a fraction of the losses that mainstream banks get on their prime portfolios. So they're doing something very right about being able to massively broaden accessibility of credit to a very large segment of the population that wouldn't normally be able to get it.
I think that's a great example of where FinTech can bring a different approach to solving something and including and drawing more people on. I think that salary finance is a similar type of kind of play. Asesh, do you want to just kind of expand on how salary finance helps with financial inclusion as well?
Yeah, sure. So I guess there's kind of two big problems we see in society. One is people don't save anymore. I guess as the generations have proceeded, economies have prospered, and people just don't save. They kind of, regardless of what you earn, you kind of spend. And the second problem we see is, banks in general, we see decline 60 to 70% of applications, and if you get declined for a loan, then you're left with kind of a few very high-cost options. So they're the power problems we see. And so what we do is we work through the workplace, and we provide access to products which are structurally designed to A, perform very well from an economic perspective, but B, very good for consumers. So from a savings perspective, employees can save directly from their salary. And so before they realize it, they may have not saved anything before, but suddenly they've been 3 or 4 months, they haven't actually realized they've saved. It's come straight out of their pay packet. They save £300 or £400, and then before they know it, they become a saver and really start to enjoy the process. Likewise, from a loans perspective, our cost of origination is very low. We have really good income data and context around income from payroll. We collect repayments directly from payroll, which A, is helpful because you're top of the hierarchy, but actually what is more helpful is the timing. What we find is 60% of people in the UK don't get paid monthly. They may get paid weekly, 4 weekly, last day, Wednesday of the month, a bit different at Christmas. And actually, for them to pay off their monthly credit payments requires them to be good at budgeting, which most people aren't. So being able to match the kind of your outgoings with your income is really, really helpful. So they're the really kind of two things we do, really help people save by making it really easy, straight from their pay, just like you do pensions, and then provide access to very low cost of credit, which economically performs for us through the structural advantages of the workplace.
Mm-hmm. There's something in there, isn't there, around accessibility to these products as well. Like from your perspective, Anne, like Starling Bank's clearly growing its customer base, and probably more than 1 million customers now. How do you think about accessibility overlapping with inclusion?
It's very interesting. I often talk to audiences such as this, and looking out in the audience, I sort of recognize more than half of you. We spend an awful lot of time talking to each other in this bubble. Mm-hmm. And number one, we need to get out. We need to take, by the way, Starling is growing outside London faster than it is in London. We have a UK-wide strategy. Talking to people, not in these sort of venues, but where we can get to people who don't revolve around the FinTech world. Secondly, it's, I think we've all gone through, the whole industry has gone through introducing those behavioural tools, the nudges and the gambling blocks and those sort of things that actually should be hygiene factors in all various, all banking products. But we've also got the situation out there where we have to include people in all sorts of ways. We do quite a lot of work with RNIB in order to make sure our services can be used by people with disabilities. We also, and this is a personal passion of mine, we have our Make Money Equal campaign, where we have a huge divide when it comes to money. Women have less of it. And throughout the world, and throughout the financial services industry, we as an industry are not doing enough to ensure that that gender diversity in how much money people earn, how much people save, and how much people have in their pensions is equal between men and women.
So, Anne, what do you think we should do more on as an industry to kind of expand on that, help solve that? It's an interesting point.
Okay, first of all, I think we have to talk about it. We have to actually sort of make it real, right? I think the more we talk about the fact that finance is unequal in all sorts of ways, whether it's people paying more the less money they earn, whether it's people who are in centres such as London, have better knowledge than people out in other parts of the UK, whether it's men and women being talked to differently about money. We did some survey work about a year ago, where we went through lots of publications aimed at men and women, and really did some real serious research into how men and women are talked to differently about money. For women, it is all about scrimping and saving for shoes and little bits of money. And for the men, it's all about cryptocurrencies and power suits. One leads to little bits of money adding up to a poor sort of, being very poor in your 60s and 70s. And one leading to taking risks and investing in the stock market. And for any journalists in the audience here today, please, when you read the next article, just think, is there any gender bias in what you're writing? And then finally, we all live in this bubble. We live in the bubble of what our lives look like. We all have our laptops. We all have our smartphones. We're going through the last couple of years whereby lots of the banks have driven their customers out of the branches and said, go home and do your payments and go to your laptop to do this various authorization. Most people don't have laptops. 87% will have a smartphone, whatever, but they don't have laptops. Let's stop seeing the world through our eyes. People live very, very different lives than we do in this room.
I think that's interesting. I was chatting to Stephen just beforehand about, so Oakam used to have 30, you said, kind of high street stores where people would go in. And so there was a fear from going more digital, would that drive more inclusion or the opposite? And I think you had a really interesting story I think you could share.
So Oakam used to have 30 stores in high streets for doing face-to-face lending with customers. They would come in, they'd talk about their financial situation, and the underwriter would make a assessment of the person's character and their ability to repay a loan and the purpose for the loan, etc. What we found is that very quickly over the last 2 years, most of our customers had smartphones and they wanted to interact via smartphones. And so we launched a mobile app a year and a half ago. We found very quickly 83% of our customers, and these are low income, groups you'd normally think of as disadvantaged, they almost all have smartphones. They're working multiple jobs, they can't come to a high street store during normal hours. A smartphone is far more convenient, far more accessible for them, and also for financial services. It provides it's more discreet and gives them more privacy rather than maybe making a phone call during lunchtime at work. Mm-hmm. And these are things that our customers value. And we found very quickly over the last year, the foot traffic in our stores dropped right off, and everyone wants to interact via the mobile phone, which is great.
It's a sad fact of humanity, isn't it now? People rather go through their app. Not everyone, but some people would. Dan, maybe I could bring you in now. Obviously, you're investing in this space. You must see lots of businesses which are trying to promote financial inclusion. What do you think the biggest barriers are for FinTech to do more to help solve this?
I think when you think about financial inclusion, I think part of the challenge, certainly in the UK market, is it's not a bigger demographic as it is in other territories. And so it doesn't really get the attention of the incumbents because it's not a major market. Actually, the underbanked problem is a bigger problem in the UK, potentially, than the unbanked problem. But that's aside. I think the unit economics are really hard for fintechs to make, well, actually for the incumbents, it's slightly easier for the fintechs, they have a lower cost base. But there's not really the volumes of people. I think when you see more proliferation of innovation in the market and more specialist niche propositions popping up, you're finding more people going after the financially excluded. So Money is one of our portfolio companies as an example. They provide pan-European banking to migrant populations. But for that business to work, it's operating on a pan-European scale. And it's doing pretty well. But what you see is a lot of the propositions we come up against as well, they start with one product and they very quickly want to go across all the financial services, almost irrespective of the starting point. If it's retail banking, they want to do savings, investments, insurance. If it's insurance, they want to go into something else. And so I think it's a hard challenge for them is one unit economics. They need to try and make enough money, frankly, from a small volume of people in the UK market, and that's tricky. And I think it's also not really a segment. We talk about the unbanked or the financially excluded. It's actually many different types of needs that are bundled into the financially excluded. So it's extremely difficult to determine what needs you need to service, and therefore what product I need and what business model I need to create to service that market. You've got so much bundled into excluded. You've got stay-at-home mums. You've got people that are uncreditworthy. You've got people that are actually good risk and had a bad run. And there's n number of these use cases.
So if that's the case, and I'm going to come to Gwyneth afterwards, do you think the government should be doing more to help the financially included? So I think there's 1.5 million people who are unbanked in the UK, so it's not a tiny number. Do you think there's a role for government to do more? And then we can come on to Gwyneth who can tell us what government are doing.
Sure, yeah. Look, I don't want to just put it on government to solve, right? I don't think that's the answer. I think there are increasing propositions to actually create economic mobility through, and finance can play a role there. So we talked about education previously on one of the prep calls, but interestingly what I find, and you're seeing a movement in the market now, is all of these new coding schools that are popping up to reskill people to get higher paid employment. Now it's really been a big push into the US market, schools like Lambda, you're seeing Flatiron here, there's a bunch of them. But that's really a nice intersection of fintech and education, whereby these propositions are popping up where people can't afford perhaps expensive tertiary education, but they go and take a 6-week coding course or 3-month coding course, and actually they can double their income. I mean, you just go on and look at the Twitter followers around Lambda, like talk about NPS, it's through the roof. There's all these people that were not economically mobile that have done these 6-week courses, funded and tuition's paid in advance by the boot camp, and they only start earning money as a fintech business, as a financial proposition post-graduation. Now, I think that's the kind of thing that starts to bring people in, because it doesn't require some hurdle, some financial hurdle, some education, literacy, whatever it is, hurdle. And so I think you will see that gap close. And when we talk about exclusion, we're also talking about banking, retail banking. But actually, there's exclusion in so many other terms as well. So how many, we think about financial wellness, and really it's two things at play when you think about financial wellness. One is economic opportunity. So how can I make more money? How can I take options and opportunities when they arise? And the other is resiliency. And it's how can I withstand unexpected expense and loss? And I can't remember the UK statistic, but I remember the US statistic. Half of the US population can't save something like $400 or $500 in the context of an emergency. Now, when that car breaks down and you can't afford to pay that, the ripple effect is enormous for those individuals. So we need to think a bit broader when we think about exclusion. It's also about how can I provide income protection. It's about insurance. It's about actually breaking the debt cycle and getting into wealth accumulation so people can get on the ladder to start making savings, start building for pensions. So it's a much bigger topic than just being very pointed.
So why don't we hear from Gwyneth? I think it was just this year that the financial inclusion report's been released by the government. It'd be interesting to hear a little bit more on that.
Yeah, so I think Dan is right. I think there are many different aspects of this question. Something that we identified from the Treasury was that, in fact, the government's efforts were slightly disjointed around this area. So we pulled together our Financial Inclusion Policy Forum, and as James said, we've just published our annual report about how we've been getting on. And the Financial Inclusion Policy Forum brings together industry, it brings together charities who operate particularly in the debt space, and various different aspects of government to think about this issue and to work out where we should best focus our efforts. So in the first year of this, we have identified affordable credit as being one of the areas that we needed to press forward on. And at Budget 2018, the Chancellor announced a series of measures that we would take forwards, some of them quite innovative for the Treasury. So one in particular, our Affordable Credit Challenge, where we will have a £2 million prize fund that, and we are just at the stage of shaping what the challenge is going to be right now. This builds on a challenge that we did the previous year, the Rent Recognition Challenge, where we identified a problem that people were paying rent that was not being taken into account properly in credit scores. So you might be paying your rent, which might be more than a mortgage, month after month after month, and that simply wasn't being taken into account. So I think 3 firms, Credit Ladder, Bud and Rental Step, were successful in that challenge and are going to go onwards with the money in order to build propositions to address that problem. So what we've been trying to do is pick off certain things that we think we can address and put some money into those. The other thing I think we need to do from government and from the Treasury in particular is we need to get the framework right. So there are lots of examples in recent years where innovative things have come up and the regulation or the legislation doesn't quite work in order to facilitate that particular business. And that is something that we've been looking at hard. I mean, one good example of that is in data, where we've been doing a huge amount of work. One problem we identified for challenger banks in particular was that you could only get out what data you put in terms of credit. So we actually legislated out of the Treasury in order to say, okay, well, even if you haven't got the data to put in, you can still get data out. So those are some examples of where I think we can make a real difference. And it's important for people to know that, you know, we're open for business in a sense. It's not just big businesses that come and talk to us. It's plenty of people from this panel and plenty of people in the room as well. We are very keen to hear about ways in which we can make a difference.
Can I say something at this point? When I started Starling in 2014, I had a phrase that I used to use, is that there are lots of new financial institutions or new entrants, but they're the wrong sort of new entrants. There's people coming to market trying to charge people who can't afford it too much. We are doing terrific things in the UK because some great businesses started, and we've got the environment where we have to grasp it and run with it because things are changing, but we could run out of steam unless we actually keep on going and keep pushing on it.
So I think one of the things the Financial Inclusion Commission report talked about was the power of open banking. Now, clearly, this is something that you guys are looking at. Do you think there's a lot of opportunity in open banking to drive more competition to help the financially excluded?
I think open banking is in its infancy. You know, we were all expecting great things a year ago, and we expected, you know, so all these things to happen overnight. It's a long process. But what open banking is about is that individuals have the right to own their own data. And you as an individual have the right to take that to the right organization to get the best deal. And open banking puts the framework in place and the thinking in place to start that journey. We're years out. We have to get a better competitive financial services industry, and allowing it to plug and play together in an open banking way where you could have Barclays doing the back end and say HSBC doing the app, creates more competition. And we need more competition, not just for the prime customers, but more competition in every single segment. And by introducing more competition, introducing more players, having a regulator that's innovative, and also allowing people to own their data. Those are what you put together to create an environment which is very different. I think we're 10 years out from having something that's radically different, but it's going to happen.
I mean, one of the things that I find exciting at a theoretical level on open banking is, well, I think one of the challenges for financial inclusion is free banking. I think the challenge there is, most of the population want their free banking, and it's certain people who end up paying for that. Open banking can allow potentially people to pick off different customer segments and drive better propositions for those. Now, Dan, you had a lot of thoughts on how open banking can actually kind of expand that. So it'd be interesting to know, do you see companies who are trying to use the open banking framework to pick off customers that banks are using to basically subsidize free banking for anyone else?
Yeah, it's, the interesting thing in this space is, and I think you touched on it, there's a wealth of innovation that's obviously enabled by creating access to this type of data. What I find particularly exciting is not this arbitrage of how I can target a specific niche customer, but actually real new innovation and how you can almost use payment transaction data as a proxy to identify other things. So, for example, I know one of the big insurers is thinking about how can they understand, and this is a really kind of silly but funny example, if I can identify the kind of person that buys those little felt things that go on the bottom of your furniture to protect your floors, you're probably a pretty good insurance risk, right? Silly example, but it correlates pretty high. And there's other things like, there's Toucan who's just come out of the nationwide open banking program where they're looking to help, to your specific question, there's a lot of people in that financially excluded category that do suffer from mental health issues. I know it's quite a controversial point to make, but that is the case. And one of our other companies, Happy Money, they ran an experiment with the financially stressed, credit card-laden population in the US market, and they exhibit the same symptoms as post-traumatic stress disorder. So there's real issues. And so now you're seeing startups start to understand that people who struggle with and are going through financial stress look at finance as an irrational problem, and it's laden with anxiety, and so they don't engage with the product in the same way as other people. So you need to design for that. You need a different type of education, you need a different type of content, you need a different type of user interface. So that really excites me, is when you're seeing people kind of leverage this transaction data for different purposes. I mean, one that most people probably know in the room is Flux, who kind of leveraging, effectively getting more access to the granular spending data, and that opens up a wealth of opportunity, and there's kind of spending analysis that you can then run to help guide that individual towards better money management. So for me, it's not so much kind of where the new segments are, but it's actually using the data in a more sophisticated way to target people's kind of core needs beyond just I need a bank account, I need an overdraft. I'm
nodding a lot at that, so
yeah.
I take it you agree.
Yeah, I'm quite frustrated by the fact that I spent a long career in traditional banking where we had all that data. And we couldn't bring it together to give insight to consumers. And anyway, we'd bring it together to give insight to us in how we could upsell and cross-sell products. I think we're in a very different world now. We have a huge amount of data about, people's lives. If we use machine learning to actually give individuals the tools so they can understand how they spend money and under which stressful situations they spend and save, and give them nudges in certain directions, we could solve a big, big problem. The most important thing is people's personal health, their family health, and then their financial health. We have a big problem to solve, and we could use machine learning on that data to give the individuals that power. And wouldn't that be great?
There's also a misnomer around banking being free, and the fact that in general, banking and core products cost certain segments, middle to Oakam, a heck of a lot in kind of fees, interest, and kind of so on. We also see the kind of advent of the subscription economy. People are pretty happy to pay for a whole suite of subscriptions. So I think Yeah, I don't think it necessarily needs to be the case that we don't have great products because people won't pay for us to be free. I think if the value proposition is right, if it creates economic incentives, then there is a lot more that we can do than is happening today.
Okay, can I just say
I would just challenge that briefly because we dug into this topic. If you look at behavioural economics, a lot of people actually will pay more if it's hidden than they will if it's upfront.
Yep.
And that's the problem, right? So you can be transparent and say, this is better for you. And we've seen this in some of our portfolio companies.
Yeah.
It's better for you if, and you're saving X% if you do X, Y, Z. But when people are approached with a charge versus them not seeing the charge, even though you want to be transparent, sometimes the answer is not that. So it's a really complex topic.
Could I also say something about, free current accounts and the fact that the whole industry is out there saying that, current accounts are very expensive, we don't want to run them. Current accounts are very profitable. And even we are offering free current accounts. And, the reason we do that, because we have a fully efficient, sort of new technology powering it. And we're unit contribution positive. So it's a fallacy if the big banks keep saying there's no way they can offer free banking in the future and they have to do something about it. That's wrong. If we get our act together and we have the right technology in the right way and have fair pricing, we can actually give free banking to the population.
And that should be our aim. But we're out of time, so thank you very much. I think, could we all give the panelists a big round of applause?